traders, and welcome to Trading Fractals. My name is Kurt, and we are going to discuss fractal lines today. We're going to talk about how we construct a fractal line, what exactly is the fractal line, and how can we trade profitably using the fractal line. So if we look down on our chart here, before we do anything, let's talk about Bill Williams and his fractal indicator. So if we go up here, Bill Williams, fractals, and we put on his indicator on this chart here and then tighten it up a little bit, you notice you have all these white arrows. So each one of these is a fractal. Let's blow this one up here and let's look at this fractal here. So his fractal indicator had a period of 2. So leading up to this high price, you would need 2 candles that were below this price and 2 candles on the right side that were below. And then this white arrow would form this fractal. Now, if you tighten up the chart, that happens a lot. So with ranging price here, you have all kinds of these fractals, up, down, up, down. And so I really never found any use for that in my trading, but it's a great concept that he came up with. So let's take that off now that we've seen what a fractal is in terms of trading. So let's blow our chart up here a little bit. There we go. Okay, so this is what we're looking at here. So on my chart, we've got little yellow dots and then yellow dots with an orange circle around it. So these are minor and major fractals. I found an indicator that would allow you to choose your own period, which is pretty interesting. So rather than have a period of 2, I mean, maybe you could make it 10. Then you need 10 candles on either side of a high or low price for a fractal. Well, that's pretty significant. So on my chart, these minor fractals or small yellow dots have a period of 7, and the major ones have a period of 12. So I just chose those. I kind of chose different periods and then looked at charts, and those are the 2 that I found that I like the most. So looking at this minor fractal here, we have 7 candles, actually more, but at least 7 candles leading up to this low price. And then we have 7 candles, let's see, 1, 2, 3, 4, 5, 6, 7. Right here, when this candle closes, a minor fractal appears. Now, a major fractal would be 12 candles, and we have that satisfied on the left side, 12 candles that are above this price here, but we don't on the right, because down here about the 9th or 10th candle, price breaks below this low price. But be that as it may, we have a minor fractal. So over here, we have a major fractal. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we have much more than 12 candles on the left side, and you can see here a lot of candles on the right side. So we have more than 12. So we have the major fractal. Now, so that's what those are, and there's an indicator for that where you can choose your period. So now let's talk about what a fractal line is. I've labeled this chart with A, B, C, and D. So what exactly is that? So for any fractal structure, we need impulse waves starting with an A point, B, C, and D. So it's kind of like high, low, or the opposite. Here's low, high. So one of the stipulations is that on the AB of impulse wave, there can be no other fractals in between, likewise BC and CD. So we have 4 consecutive fractals alternating from high-low or to low-high. So in this case, high-low. 3 majors and 1 minor. So the best scenario is to have 4 majors. The worst scenario is 4 minors. Either way, and anything in between, you can still construct a valid fractal line. But 4 majors is always going to be better. So in this case here, what we're doing is we are going to connect a line from A to B. That's going to denote, let's make that Dodger blue. I like to stick with the same color sequence. And I apologize for the dark charts if that doesn't float your boat, but my eyes, I have some light issues, and the dark chart just helps me out. So that's why it's on there. So let's see, that's, that should be thick enough to see. We can make that a little bit thicker there. So now we can see that fractal line. And when we double click, it locks it into place. We double click again, and it gives us the midpoint. Now let's draw our CD line and right to that minor fractal and double click. We don't do anything with BC. Now, another stipulation, and we want to see waves that are fairly uniform. I mean, it's hard to find all uniform waves. So when we come down, we don't want to see a lot of wild price swings and big wicks in between. So this is pretty decent, and really nice coming down here. We don't like to see big wicks at the fractals either. If we have a big wick and the fractals up here, that's kind of going to skew the results and skew our line. So in this case, we have our AB wave and we have our CD wave. So now all we're going to do to construct what I call the fractal line is draw a line that connects those midpoints. We have a line and we want to be really accurate here. So there we go, right there. So we're right on the midpoints. Perfect. Now we can lock these all into place just like that. Okay, so now we have a fractal line. Well, what does that mean for us? Well, let's see. As price developed here, let's first of all note that we can't draw this structure until D appears, this little fractal here. And that's not going to appear until 7 candle closes after this low price. So 1, 2, 3, 4, 5, 6, 7. So on this candle, let's go ahead and put a vertical line there. At this candle close, which it hasn't broken below this price, we get our minor fractal. We can now draw our impulse waves, get the midpoint, draw the fractal line. So let's imagine we're here in time. We have this fractal line just kind of out there in space, and price is here. So we haven't seen any of this price yet. So what are we really looking for? Let's take this off our chart now. So the first thing we're looking for is we want, on that 7th candle, we want price to have price separation from this line. We don't want, if price was right here, if the 7th candle closed right on the line, we really wouldn't have any trade at that point or any possibilities because we're already on the line. So what we're looking for is price to retrace back to our line, and we're looking to sell. We're looking to sell on the first touch. So in this case, it went right basically to the line. That's where our sell point is. You could always scale in a couple of pips early. And then it's just a little bit of a sell-off. So we're not looking for like a major reversal, like, ooh, this is where price is going to reverse. It's coming up here and it's going to sell off 100 pips. We're just looking for a little resistance on that line. So we're on a 30-minute chart. And by the way, we use this on the 30-minute, the 1 hour, and the 4-hour charts. I prefer the 1 hour. That's kind of the sweet spot. We don't really go any lower. We don't really do 15-minute charts. Bitcoin seems to work good on 15-minute charts, but basically we like to stick with major pairs. And we like to stick with the 30 and the 1 hour generally, and then the 4 hour as well sometimes. So how do we set what our stop loss is going to be? If you look up here at this indicator here, this is an indicator that gives us the average pip movement for the candle of the time frame we're on. So we're on the 30-minute. So this tells us that the average 30-minute candle moves 11 pips over this number here, 21 periods. And this can be adjusted in this indicator. So over the last 21 periods, the average pip movement's 11 pips. So we can use that as a starting point for a stop loss. So if we put that stop loss in, it wouldn't be very high. It'd be somewhere around here. That's about 11 pips if you look at it. So we're at 134.19 up to 132. So it'll actually be a little lower. So we don't need a lot of room here. So having found our stop loss to be 11 pips, or something close to that, we can now gauge what we want our profit to be, our take profit. So we want to get at least, let's take this off there, we want to get at least 1.5 to 1, preferably 2 to 1. So if we're going for 1.5 to 1, we'd be looking to get 16, 17 pips. So in this example, and of course this is a cherry-picked example, price sells off 130.19, sells off about 24 pips. So there's enough to get 2 to 1, but certainly 1.5 to 1. That's all we're looking to do. So in this example, when D forms on this candle, we have the price separation. But another thing that I like to do is I like the fractal line to be moving away from price. So in this scenario, as time moves on, let's say price just kind of was just sort of consolidated down here. The longer it goes before hitting this line, if it ever does, the farther it has to travel. And I like that because it has to, price has to chase up to the line. It's going to use up a lot of momentum, which gives me, I believe, a better opportunity that it's going to actually reverse and sell off a bit at that line. It could be the other way. The fractal line could be coming down where you're going towards the line. So as time moves on, price even going sideways is basically going to run into the line. So in that case, you might not want to trade it. So in any event, even if you don't want to sell this line, you could wait for the line to break and then buy the other side. That's a possibility. So it's hard to say what happened here. But a lot of times, especially on the 1 hour time frame, you get a little higher time frame, you get a close that goes through the line, and then you can wait for a retest of the line and buy the other side. But this is the best scenario possible when you're chasing the line. So that's basically the gist of it. And there's a lot of little nuances, which I'm not going to get into right now. I'm going to do more videos. We're going to do lots of examples. I actually have an indicator. And let me go to a different chart. I'll show you where let's find a high low. Here's a high low. So that would satisfy our thing. So rather than have to draw the line and put the thing, I have an indicator where you can just literally click on the A point and it draws it for you, right? And if I hit the C on my keyboard, it just goes away. If I hit F, it locks in. So there's an indicator for that. So in this case, you can just look at like what happened. Let's find that. There it is. Let's tighten that up. Sorry about that. Where are we here? Okay, we're way back here actually. So we can count from, here's our D, our last fractal that formed. We need 7 candles until we could have drawn that line. So 1, 2, 3, 4, 5, 6, 7. So in this example, when this candle closed right here, price is right on the line. So we don't have a trade there. We can wait for price to separate, maybe sell this side, but in general, if we don't have price separation, we're pretty much not going to trade that. So anyways, back to the chart we had here. So that's the basic idea there. And I know it might seem strange. I think, well, that makes no sense, but it's kind of, have you ever seen like Andrew's pitchforks? When it's kind of the same sort of concept when they put the Andrew's pitchfork. So let's find Andrew's pitchfork, and let's go with B, C, and D. You click the 3 points, and it puts a pitchfork on there. And so in this scenario, price theoretically after this point moves back to the center line, but you can, move the angle of that and do all kinds of weird things. So it's sort of like if you put a pitchfork here, it kind of, it's sort of on the midpoint, but it doesn't, it's not quite the same, and I don't really trade pitchforks. There's also something called the mean reversion line, I believe, and that, is a straight line based on, all kinds of, the mean of the candles and blah, blah, blah and stuff I probably don't even understand. But I've settled on this fractal line, and I think it's a great, great strategy. So I would encourage you to pull up your charts and just find these nice even waves. So if you go back and look, like, there's one here, it's not great, 1, 2, 3, 4, and it's kind of, it's kind of a little bit tight. Let's go to our chart here where I have the indicator still on there, I believe. Where is it? It would be right... oh, I don't know where it is. Actually, I don't have it on there, so let's skip that. Let's just get back to our example here. So let's call that a day on this little video, and I'm going to do a lot more videos on this. I'm going to do metaphor tutorials. I'm going to do some reviews on prop firms that I use. I do some EMA cross strategies, so look for some other videos. I am just starting this channel out, so if you find any useful content in this video, please hit the like button and subscribe. That would really help me get this off the ground. As you know, trading is a pretty lonely endeavor. I love trading. I've been trading since 2007, which is why I'm using Metaphor. I've been using that for so long. I don't really care for Meta 5. There's a lot of great platforms out there. There's C-Trader, TradingView, Ninja, but I use Metaphor. There's just no reason for me to switch. We're also going to get into some Renko strategies. So I hope you found some use in this video, and please leave some comments down below. If you have any questions, I'd love to answer them. Like I said, we're going to do a lot more examples of this, but I just wanted to get a video out there and just show the basic structure, and we'll go through a lot more examples in the future. So in the meantime, thanks for stopping by. Trade safely, and may the pips be with you.